Hi, everybody. Eddie here, going to do a market update for next week. Just want to apologize for my audio quality. I'm actually just on my laptop at a hotel, so I don't have my mic with me. Um, last week is pretty interesting week. This is the weekly chart of the SPX. Um, on Friday, we had that nice bounce off the support of 3,900. It went down to as far as 3,908, and it bounced hard off that level and closed at the highs of the day. So that's a really strong sign. Good end of the week. Hopefully next week get some follow through. So if you look at this pattern right here, we're still making higher highs, higher lows. And off this low right here is still considered a higher low. It did came down pretty far. I would have liked to see it continue off this level over here, but it actually came down. Test this because of the bank situation, and then it bounced her off that level. So we're still heading into a stronger seasonality right now. So I do expect that in April we have a good month unless there's some news coming around. All right. So for next week, I'm actually looking forward to hit somewhere around that 4,100 area. Right. So if we get some follow through, if we can break 4,000, 4,000 is a very key level to break. If we can stay above 4,000 and break above 4020, chances are we're going to go test this 4080 and then 4,100 to fill these gaps over here, and then possibly come back up and test 4,200 in the next few weeks. Right, that would be the scenario of a bullish scenario. The bear scenario is that we actually next week we get a fake out and then came all the way down and we break this low right here and come back down, right? So that can happen as well because we are still compared to this trend right here. It's right here. This is actually lower highs on the way down, right? So it is an area that has to break. It's that 4,000 to confirm that we're actually going to go higher, right? If we get rejected 4,000, it's likely we're coming all the way back down. Maybe retest this channel one more time and maybe retest for 3,800 one more time before the next leg up. But as far as right now, it's actually looking fairly bullish. If you look at the weekly chart, uh, the weekly chart is still looking okay. It is a reversal, somewhat of a there's a bit of a tail on this because we did test it around that 40-50 earlier in the week and came back down. So there's a little bit of a tail in there. So what you want to see next week is we actually break the high of 39.70 and continue higher. If it breaks the low of this candle, likely chance it's going to come back down and retest the lows of right here, right? So it's important that that we break that 4,000 next week. So pay very close attention to see what happens. The queue is actually performing way better because there's no banks in the queue, right? They're less exposed to the bank sector, which is dragging the index down SP 500. So if you look at the weekly chart on the queues, we had a double top. We did get a little bit of a rejection, but we kind of saved it on Friday. And if you can see right here, this consolidation right here, we've broken out of this consolidation. It's stacked moving averages on the weekly. I'm looking at coming back up and test this 325, 330 area, right, for the next leg up. So if this can break above this 315 area, chance that we're going to come back up and test up here at 330. And that would be a pretty bullish sign. It is kind of somewhat in the range right here. It is a consolidation range. It is higher highs, higher lows on a smaller uh, trend basis, but sometimes that can turn into bear flags. So, you want to see some follow through and breaking this 335 is a key area to actually confirm that we actually want to continue higher, right? That would take us off from this lower high, lower low scenario. So because this high right here is still a lower high compared to this. So it is changing trend. So you can see right here, we're making lower highs, lower highs, lower highs, lower lows. All of a sudden, we made a double bottom. We have a higher low, and we just need confirmation by making a high higher than this high to go higher. All right, so that's what we're looking for next week. And techs are pretty strong signs that is moving higher. There's a lot of bases in the tech sector, especially with the FANG names. Um, One of the key sectors that's pushing the Nasdaq up is actually semiconductors. The Nvidia has been pushing hard up with the AI. A lot of people invest in AI right now. So Nvidia is the stock of choice. We'll talk about a little bit later, but that's the reason why the Nasdaq's doing so well is the semiconductors actually doing really well. Okay, let's take a look at the VIX. So the VIX came up as high as 30, came all the way back down to now around 20 again. That's a good sign for bulls, right? If we cannot break above 30, right? We cannot go back up to here. We got our spike. Now it came all the way back down. That means the trend can continue higher for the S&P 500. So if the trend stays, if the VIX stays below 20, chances are the S&P 500 can continue to go up, right? As long as it stays hovering around under 25, on the VIX, it's still good. And that means that there's not a lot of fear, not a lot of panic in the stocks that usually end up pushing the stocks actually higher, right? So that's what I'm looking for on the VIX. I just wanted to stay down. As long as it stays down, it is still good. It does look like it was making like a cup and handle type of pattern with a blow up, but I think we get our volatility right here. As you can see, that's the big volatility, and then a big drop in volatility. So it's still a higher low. You do want to see it come back down, probably like around that the teens area, like 18, 20 area. That's where you want to see it stay around, and then the stocks will steady go up when it does that, right? So like right here, we're just back and forth between like 15 and 25. That's a good way to keep the market going up steady. Let's take a look at some stocks. So Apple is doing quite well. It is at the upper range, but it looks like it's continuing to go higher. So there was the inverse head and shoulders right here, and then it broke above this neckline. So right here, it came back, retest, and it looks like you want to continue higher. So the next target is actually highs right here, right? So if it actually holds this area right here, this neckline that we just broke, then possibly we'll go back up to maybe 170, 180 area. So there's a little bit of run room. It's not a stock that I like to play that much just because everybody's Apple and there's really not a lot of big movement. But the last few months been pretty good on the trade if you were in Apple. So the next target is just right up here. You can actually just sell some puts and just grab some income you want. But in the upper range, I choose not to trade this because there's a lot more discounted stocks, the high quality discounted stocks that you can get into other than Apple. So I tend to avoid Apple for unless it's steep discount. AMD is I was talking about semiconductors taking off. So this is AMD. Look at this. This is a very nice trend here. So we have this big downtrend, then we got the reversal, higher highs, higher lows. We're up at this level. Is at resistance right now. So I do expect a pullback, a retest of this breakout area, which is around that 88. Come back, maybe retest around 88.90 and then continue higher. The target is actually 120. There's a gap right here that needs to be filled. So if you actually come back up, hit 110, break through that, go 120, fill this gap, there's a lot of runway for AMD if you actually continue higher from here. Amazon's actually starting to look better. We have this higher low. There's this consolidation. We have the upper edge of this falling wedge. 200 PM moving average is right there. Earnings is on around the corner. So if earnings are good, scenario would be we break through here and go test this 115, break 115, going to 120, break 120, going to 135 and fill this gap right here. So that's the path for the bull side, right? Bear side is if we can't break through here, we come back down and we can go all the way back down to low priority channel. But that's an unlikely scenario. But if market's going to tank, it will happen. If market's going to stay steady, likely we're going to break out of this and then go test this 130 area. So this is a key zone right here, right? This is a huge demand zone, right? Meaning there's a lot of buyers down here. If all these buyers get taken out, it's a long way down. But if it holds, it can come back and come back up to around this 130, 140 area to test these lows right here, which is a lot of supply up in this region. So in between, as long as you've taken out all this supply up here, you can go all the way back up to the supply area up here, right? So that's the area you want to look at, and also use as your target if we do break out, right? So around that 150, right? So this is the supply area, this is the demand area. In between is anybody's game. So if it breaks out of this base, then we're going towards the supply area, which is all the way up here, right? That's how you would play this. And I do have shares of Amazon, and I've been selling puts on this, so I've been collecting premium as well. So this is something that you can trade for longer term. And the down here at $100 for Amazon's a good price as well, almost half price from where it was last year. So it's a decent area to start a position for your longer term portfolio, and then add to it as it start coming out of the base, right? Facebook, nice V-shaped bounce right here. It is getting close to the resistance area, so the easy money's been done. What you want to see is somewhat of some consolidation right here, and then a breakout and fill this big giant gap right here. So for longer term, definitely playable. For shorter term, you can actually sell some puts, try to grab some shares while it's still cheap, and then hopefully you'll come all the way back up and fill this gap right here. That would be about a 50% return if that happens, which is a pretty good play. If I was going to trade this, I'd probably try to get some shares around 180, 150. If I tried to get some shares at 150, it didn't happen. So right now it's up too far for me to try to get into it up here. So I could sell puts down here, try to accumulate some shares at the lower end of it. You don't have to sell go in a big position. You can go in smaller positions while it's up high, and then hopefully it accumulates as it consolidates. And then once the setup is better, then you get an explosive move to the upside, right? Because right now the move's been pretty steep, meaning whenever a move is steep like this, you can come back steep as well if things don't go the way it does. But likely scenario right here is they go up and it consolidates and then it breaks out. Google, really nice setup right now. It's above the 200 right now. All the moving averages are stacked right here. This has been a months long, few months long base. Uh, it's been basing for almost a year. So it's going to be a very strong, powerful move once it breaks out this base. Your target 120, and then this 135, and then the highs. Right. So it's 50 points from the highs. It's a good area to get a position. So I do have some shares. I sold some puts, trying to get some more shares cheaper. It doesn't look like it's going to go any further down, so I'm probably going to start accumulate some more shares up here, and then hopefully we can come up and test this 130 area. Microsoft, very good performance in the past little while. They had a nice base down here. It broke an elbow base. It's making higher highs, higher lows, higher highs. It is at this resistance point. There's a gap that needs to be filled right here. So it almost filled the gap there last week. Likely next week is going to get a push and fill the gap, maybe test 300 before a little pullback and then go up higher. For Microsoft, I would like to see a pullback around the 260 area. That's where I would want to get some shares around 260. I did miss the boat on Microsoft. I traded it last week, just a small trade, but definitely missed the boat on this one. I should have got in when it hit that triple bottom, but I was looking for more of a steeper discount. it didn't come far enough for me to really want to get into it. So compared to like Google and Amazon, so I concentrate more on Google and Amazon because it was at a steeper discount. Right here, I'm just looking for a pullback. I'll get a little bit of exposure since we're above all the stat moving averages. It needs to come back, cool down a little bit, and then go for next leg up. Microsoft's a good stock to get into some leaps. But because of the economy the way it is, I don't really want to touch any leaps at this point. Even though that I probably can miss out a big run, but I'm just afraid that with the banks being the way it is, and then the Fed need to pause and start pivoting. Usually that's not great for stocks. Usually that's a early sign that the Fed did something wrong and they have to compensate. And that usually gets us into somewhat of a recession a little bit later on. So I I I'm very content to want I want to go long, but I really don't at the same time. So I'm just kind of trading it as we go for now. If it's at a steeper discount, I definitely would get into some leaps. But right here, I'm just not. I'm just probably just going to sell puts. I've been playing at the this bear market a little bit different than what I normally do, because usually it's a pretty clear what the government wants to do, what the Fed wants to do, and and they usually go pretty smooth. But this time there's just too many things in between, and it's a little bit difficult environment to trade for longer term, especially with leap options because they do go to zero. So right now, everything looks good. So I'm kind of trading some. I bought some leaps on the cheaper stocks like Google and Amazon, but anything else, I'm still waiting for it to come back down so I could get into a cheaper price for some leaps. Netflix is still trying to get back to this resistance area right here. 400 is a big resistance. There was a nice bounce around that 300. It is still considered higher low to this, but I don't think it's going to take some time to make a higher high. It's going to take a lot of momentum to make a higher high because it can be down a little too far. So I'm thinking you'll make a lower high and then maybe a little pullback with consolidation before the next big move up. Maybe earnings is the catalyst that can push this thing above. If earnings are bad, it can come back down pretty sharply as well, because that's how Netflix works: big ups, big downs. It's not a stock I usually trade, but yeah, I know it's a favorite among some people. So that gap fill play would have been the only play that I would trade it, which I didn't. I kind of just uh, kind of day traded this a little bit in a small swing trade here and there, but I didn't ride this whole thing. Probably should have, but I didn't, because that was a pretty large gap, and it took some time to fill that gap too. So Nvidia, so this thing is a beast. I thought it was going to pull back around right here. So we're going to come back to around 180, and then it'll get in 180 and go up. Completely missed it. It just went straight up. So this is one of those stocks that just goes parabolic on time. So there was a huge short squeeze right here when they said they can't sell to China, it waterfall down, and then they said they made a new chip for China, and then suddenly ChatGPT became a big thing, and then AI was what everybody wants to invest in, so everybody jumped on the AI boat, and Nvidia's the stock of choice for AI, so it had a huge push up all the way back up to this high right here. So you're not that far down from the all-time high. So this is one of the huge moves that you can get off a stock like this. And look at this. If you just follow the trend from the 8 and 21, you would have stayed in this thing the whole time. All right. So right up here though, I I can't see it breaking this high. I can't see it breaking this high and go all the way up to 340 right away. It needs a pullback. Uh, I'm I'm hoping it'll pull back to around this 200 region. If you can pull back to around that 200 area, then maybe that would be an area to go back in. Uh, Possible it is very extended. So when these things go way extended, they tend to come back really sharp like this. So they have the huge formal rally, and then it gave back all of its gains at the same time. So right here, I'm kind of looking at this, looking around 190, 200 on the fib levels. So this 190 absolutely needs to hold if you want to continue higher. So up here, I wouldn't short it, but I would wait for a pullback and go for the long side if it holds around this area right here, around that 190, 200. Tesla has like a little bit of like a cup and handle thing going on right here. So this was the kind of like a inverse head and shoulders, cup and handle type of pattern. So right here is one of the shoulders, the other shoulder, your neckline's up here. It did break above it a little bit, rejected off the 200, which I thought it would, and then maybe give another try around this 220. This 220 is 220, 240 is an area you want to see it break. Once it breaks out of here, it's out of the downtrend, right? So once it breaks above here, you'll likely chance it'll come up, retest, and then continue higher up to this 320 region. So that will be your target if it does go down. Now, if this fails this 160, 150 area, there's a gap down here that still needs to be filled around 145, and then it can come down all the way back down to 100 if things go bad. But at the moment, it's still looking fairly good. It's just in the consolidation phase right here. You want to pay attention to this box right here. Oops. This box right here. So if you can break above this box, it's bullish. Break below this box is bearish. So that's why I would trade it. I've been selling puts on this. The premium is actually really good on Tesla, so you can sell puts down at this area. I don't mind owning it for long term down here around that 150 area. They do have earnings coming up. Don't know if they're going to beat or they're going to miss. They did lower their prices on a lot of the models in Asia, so maybe they're going for volume. Let's see what happens. If their numbers are good, chances are we're going to break above this rather quickly. Because once they get confirmation that they're continuing to grow and make more money, short squeeze can trigger this thing and then get you all the way up to $300 in a hurry, right? At the moment, I would just stay in the sidelines or just go in small. Trade the range if you can. Trade the range, then just wait for the confirmation. As you can see, I already have my alert set up at 220 break. So I am looking for a bullish run. And I am selling puts to try to grab shares at around that 150 region. Right, so that's pretty much it for this week. Next week, hopefully we get a bull week, and then we get into strong seasonality, and hopefully get a nice ride up from there. Right, see you guys next week.